already follow us on Instagram, like Kristen was saying, we try to drop just like tax tips and tricks all the time. More so now because it's tax season, every like real estate agent's favorite time of year, I know. But we try to make it less scary and try to teach you ways how to just save a bunch of money in taxes. So if you don't mind, I'm going to share. Oh, could you allow me to share a screen?
Yes, let me make you the host. Or can I? Yeah, I'm going to make you the host. So you might just see people popping in.
Okay.
All right.
I'm going to do a little presentation with you guys of like commonly missed deductions. And I'll kind of gear it towards real estate agents. Can you see my presentation? Not my crazy background, right? With my million tabs. Okay, cool. So just a little bit about me if you don't already follow us on social media. I've been doing taxes for 13 years. This is my 13th tax season. I started Your Tax Coach a few years ago because I realized no matter what accounting firm I worked at, they weren't actually helping anyone with their taxes. They were filing the forms, but they weren't saving anyone any money, and they sucked at communication with their clients. Like, have you ever been talked to an accountant and you're like, I have no idea what the heck they're talking about? Yeah, we saw that every day too. So I was like, there has to be a better way. So started Your Tax Coach. It was just little old me, and now we're 10 women strong. So that is really cool. I always have coffee in hand. We actually even have our own coffee line for entrepreneurs. So that's cool too, because everyone was seeing me drink coffee and they're like, you need to just have your own coffee brand. And I was like, okay, sure. So I'll dive into some business deductions, and then please ask your questions as we go along. You can, like Kristen was saying, either raise your hand or put it in the chat box. Or you can even unmute yourself too, because a lot of the times I won't see it in the chat box and I don't want to like skip you over or something. So as you guys know, probably most of you are 1099, right, from your brokerage. So at the end of the year, probably in January, you got your 1099 and you were like, oh man, I made a bunch of money. That probably means I'm going to have to pay taxes on it. And I didn't keep track of any of my expenses all year long, right? It's probably most of you. And then you're like scrambling to try to find all of your deductions. And then you're like, I don't have my receipts. And so I just want to give you some guidance when you are going back, like for the last 12 months of your statements or whatever you guys are looking at, to just add these deductions back in, because it'll lower your profit, which will lower the taxes you have to pay, right? So subscriptions. This one, there's obvious ones, right? Like if you guys subscribe to like Canva to make pretty slides on social media, or Microsoft or G Suite or something like that. But there's also all the other subscriptions that we subscribe to, like music, right? Do you listen to music while you're driving to go show a house? Then your Spotify or Pandora or whatever subscription can be a business write-off because you're listening to it while you're working. Same with Netflix or Hulu or whatever, TV subscription you subscribe to. If you're like writing offers while you're watching those things, that can be a business expense as well. So it's just like if you owned an office building, you walk into, I don't know, a dental office, a doctor office, they probably have TVs playing in the lobby, music playing above, it's the same thing. So I would say if you have an iPhone, you can go to your like iCloud and see everything you subscribe to. It's probably more than you think. Same with like Audible. If you subscribe to Audible, that like reading, the book thing, that's a terrible way to describe it. But if you read like real estate books or just self-development books, anything that can move the needle in your business, all of those can be a write-off too. So office equipment, probably most of you work from home. So don't let your accountant tell you you cannot take home office deductions. That was a thing like literally in the 90s when nobody worked from home, but now everybody works from home. So please take your home office deductions. And if you're not getting like at least $5,000 in home office deductions, your accountant's probably doing it wrong. So make sure you give them every expense, because you can take a percentage of your mortgage interest, your property tax, your insurance, all of your utilities. If you have a cleaning person, a landscaper, a pool person, security, anything related to your house, you can take a percentage of. You remodel your house, you put a pool in, all of that goes into your home office deductions. And then say, for example, like I'm in my home office right now. So I could write off the wallpaper, the flooring, the rugs, the ottomans. If you like to buy plants for your office or flowers every week, like anything that goes into your home office, you can take as a deduction. And then with that, also try to think anytime you buy any piece of technology or equipment, so like a phone charger, that's a business expense, right? You have to charge your phone while you're working. New AirPods, what else? Anything tech related. If it starts with an I, you can probably deduct it, right? You have to get a new computer, a new iPad, a tablet, anything. Someone asked what percentage can we deduct for office and equipment? So for the home office stuff, so like your mortgage interest, utilities, all of that, it's a percentage of your house. So say your home office is 10 by 10, so 100 square feet, and the total square feet of your house is 1,000. That's 10%. So you would add up all these things, you get 10%, right? But for the actual stuff in your home office, you get 100%. So you can write off the whole phone charger, the whole AirPods, computers, printers, pens, papers, journals, calendars, bouquets, anything. Does that make sense? Any other questions on home office? Before I move on to everyone's favorite topic, food. So prior to COVID, the rule for meals was that you could add up all your meals for the year and you can take a 50% deduction on your tax return. So say throughout the whole year you spent $5,000 on meals, business meals, you really only got $2,500 as a deduction. But a good IRS rule that I think they passed, because I think they felt bad for restaurant owners during COVID, is that they said you can take 100% of your meals deductions for 2021 and 2022. So they're literally telling you, please go have business meals. So while you can this year, go out to eat as much as you can, talk business in some way, shape, or form, and write that off as a business meal. But also, I would say probably like 99% of the time you go out to eat is a business meal. It doesn't just mean like you sitting across from a client of yours having a business meal. That could be, it could be a colleague. It could be somebody that could ever be a client of yours, because that's a prospect meeting, right? They could someday in the future be a client of yours. Or if someone could ever refer somebody to you ever, right? Which is pretty much everybody. Could they ever refer someone? That's a referral meeting. Maybe it's another real estate agent. So it's a networking meeting, a marketing meeting, because maybe this person can promote you in some way, shape, or form. So really think like whenever you're out and about having a meal, it can probably be a business expense. Now with that, and with really any of these deductions, keep your receipts. The IRS rule says you have to keep all receipts over $75 is the rule. However, if you're audited, they might ask you for all of your receipts. So I would just say keep them all just to be safe. Plus, I don't want to be looking if, oh, is this $74 and this $77 or something, just keep them all. If you don't have your receipts for like last year, I would say still take the deduction. It's better to be like, oops, sorry, I didn't know, than to just like not take the deduction, because then you're 100% not going to get the deduction, whereas you have a 1% chance of getting audited. Actually, right now it's like 1/3 of 1%, because the IRS is so low staffed.
I have a question, Barb. So if you're going out to eat, does that include like coffees and alcohol on your tab?
Yes, everything.
Everything.
The only wording in the Internal Revenue Code says it can't be lavish or extravagant. But what does that even mean, right? Lavish and extravagant for one person, ordering Cristal might be different than like another person just getting a glass of wine, right? So I've never seen them in 13 years say that something was too much. Actually, we had a business event last year where there was like 10 bottles of Cristal ordered and we deducted it. So I would say take it all. Yeah, there's no rule that says you can't take like cocktails, drinks as a deduction. For coffee, I would say like either make sure you're there with someone, right? Because then you can say like client referral, prospect, marketing, those kind of things. However, if you're just going to like a coffee shop to work or like research listings or whatever, and you're kind of by yourself, you can call that an internet expense because you needed that coffee shop to use their internet, right? So put that
Oh, that's smart.
internet expense. Yeah.
Real quick, Barb, there's a couple people in the waiting room, I think.
Oh, do I
I
have
just got a
to?
text. Yeah, you have to, because you're host, I can't see them.
Okay, 1 second.
What about, so one thing that I did, because I do coffee appointments all the time, just to make it easier, I started buying like $25 gift cards at the coffee shops I go to all the time. So it would be like $25 versus like $7 all the time. You know what I mean? So I don't know if I'm allowed to do that, but I did 25 because isn't anything over 25 you can't like buy gift cards for or something.
So I think you're talking about the gift rule. There's a rule for gifts, which I think I'll go into in a second, but it's such a stupid rule. It's been around since 1986. They haven't adjusted it for inflation. So this was back in 86. They said you can't buy any gifts for your clients greater than $25, which like if they're buying a house, you're probably getting them a gift over 25 bucks, right? Well, the IRS says you can't deduct that. So a way around that would be either try to get like stuff with your logo on it or put a little card in there that says, hey, the biggest thank you would be if you could post this on social media, because then it's advertising. It's not a gift, right? If they're advertising for you, it's no longer a client gift. So try in some way, shape, or form, like make it fun and friendly for them to post about the gift. So then it's advertising. But really to your like specific question on gift cards, the IRS hates gift cards. I would say just buy the coffee. The IRS really doesn't like when people buy gift cards. I don't know why. Because say the $7 coffee, you bought a $25 gift card. What'd you do with the other 18? You know? So I would just say, just buy the coffee, keep the receipts. Oops, I think I switched pages. So we were talking about meals. So the IRS wants you to take meals this year. So do it as much as you can. Another really cool kind of home office deduction is that just like back to the doctor office example, if you went into their break room, they probably have like trail mix and protein bars and apples and whatever snacks that they have in their break room, plus like, I don't know, sparkling water, soda, all of that. You can have the same things in your home office and write those off. So essentially you can write off all your snacks for the year. What I would say is definitely have 2 transactions when you go to the grocery store. So like we do a big Costco run once a month and we'll always have 2 transactions. Like one is our home office snacks and then one is just like our daily, you know, meat and vegetables and that kind of thing. So don't forget, you can write off your snacks. Let me go to the questions really fast. The meal total has to be $75 in order to deduct. No, the meal could be $3 and you can deduct it. You just have to keep receipts over 75, but I would just say get in a good habit of keeping all receipts. And then does this have to be paid with your business accounts? So yes, as much as you can, you should be separating your business accounts from your personal accounts, because if you're audited and you don't have a business account, the IRS is going to say all of this is personal and you don't get to deduct any of it. So if you don't already, get yourself, well, and to kind of go back even further, I would say get an LLC, get an EIN number, and then go to the bank and get yourself business bank accounts and business credit cards. I love American Express for business credit cards because they don't run it under your personal credit. So you're kind of building business credit, which is kind of cool. Plus the perks of Amex are awesome. But if any of you make over $40,000 a year, you have to have an LLC, like in terms of, I mean, you don't have to, right? You don't have to have anything, but in terms of if you want to save in taxes, get an LLC and then chat with us about switching over to an S corporation, because if you don't have an LLC, or even if you have an LLC, you're paying the highest amount in taxes. You're paying federal tax, state tax, self-employment tax. And self-employment tax alone is 15.3%, and that's going up this year. So think if you just made $100,000, you're paying an extra $15,000 just in self-employment tax because you are either a sole proprietor or an LLC. But if you can switch over to an S corporation, you save that 15%. So essentially on 100 grand, you're saving 15,000 in taxes. It's a big, big deal. More if you make more, right? But even if you're making 40,000, you're going to save 6 grand in taxes. So super important. If any of you don't have LLCs or S corps, please chat with us after. Sorry, let me admit this person. Where was I going?
Quick question.
Yeah.
How much is it to like open the S corps and LLCs?
So you have to have an LLC in order to be an S corp. It doesn't cost anything to like have your S corp, but it'll depend on your state, right? If you're in California, it's the most expensive. It's $800 a year to have your LLC. That's just what California charges. Arizona, it's like 75 or 125 bucks. It's not very much. North Carolina is 200. So every state's going to be different, but either way, it's like totally worth it for the tax savings. Okay, so food, remember, write off all your meals, basically, keep the receipts, have a reason on the receipt because you're not going to remember years later. So either put like referral meeting, marketing meeting, and then write off your snacks. So have 2 transactions when you're going to the grocery store. Someone asked, can the LLC fee be a write-off? Yes, anything related to your business is a business expense. So your LLC fee, bank fees, your fee to us if we are your accountant, you know, anything, lawyer fees, all of that.
If you do like Instacart or something and it comes to your house, but you're going to bring stuff to the office, you can write off Instacart, right?
Yeah, under your subscription. So same with like Costco or Sam's Club or something, you know, if you have, or Amazon Prime or whatever. If you use any of those things for your business, those subscriptions are a write-off.
What if you have multiple businesses? Like, how do you know where to write them? I guess, so like, I feel like for me, it's hard because of the disorganization when I start doing that, because I have everything so separate. Like, how would you suggest doing that if you have multiple businesses?
So 2 ways. You could either say like 50% of this Costco membership is here and 50% is there. That's probably the harder way, right? Because then you're having to like split stuff out. I would just say, kind of think which one is it more for, you know, or like if the Costco membership goes here, maybe put the Amazon membership here. I would say they're probably less picky on where it goes. Just make sure that it's 1, a business expense, and 2, you have the receipt, you know.
Okay. Thank you.
And then someone asked, yeah, you're welcome. Someone asked proper way to keep receipts because they fade. They do fade, and it's kind of crazy. I've seen the IRS ask for receipts before, and the client came with like a baggie of receipts, and the whole baggie was like magic paper. It was all like gone. So I would say take a picture of your receipts. The notes, if you have an iPhone, the notes app has a scanning feature, so you can just keep all your receipts like in there. You could just keep it in your photos. If you use QuickBooks Online, they have a scan receipts feature. And then there's just apps that like solely hold receipts. So like Expensify or Shoeboxed, things like that. I kind of think just taking a picture of it's easier, but Someone asked, can we write off expenses for 21 if I didn't bring in income? I worked as an agent for a few months last year, paid startup fees. So the rule for that is you can take expenses in your business, but you can only take them if you tried to start earning money, is kind of the rule. So as long as you tried to start earning money, you can take expenses. Where you're limited is startup expenses. So you can only take up to $5,000 of expenses if you haven't started trying to earn income, if that makes sense. So this is more in the sense of like, say you were opening a brick and mortar like clothing store, you could only write off $5,000 of like outfitting the store before you started like your grand opening, right? But yeah, still take your expenses. Don't be afraid of taking a loss because your loss will offset if you have other income or your spouse has other income, things like that. Someone else asked, can the S Corp be for any type of business? Yes and no. So you never want property in an S corporation. So if your LLC is holding like a rental property, you never want that to be an S Corp. But besides that, I would say most businesses are good to be an S Corp. Well, if you plan on selling your business ever, you probably shouldn't be an S Corp because you should be a C Corp because there's an election where you can exclude your gain if you're going to sell your business, but that probably less applies here. Okay, I'll move on to education expenses. So this would be, so what it wouldn't be is the cost to get your real estate license, because you can't expense like the thing that you did to start your business, if that makes sense. So like I couldn't write off my master's in tax degree because I had to get that before I started my business. But I can write off all my other certifications that I get or my continuing education. So same with y'all, you can write off any continuing education that you might have, or maybe you want to get certified in something else. You can write off those certifications, or say you're in a membership or you go on a retreat. Like I know Kristen has some awesome retreats. All of that is business related. Anything that moves the needle in your business. So like courses that you take, like we have a Write Off Your Life course. Yeah, anything in your business. Someone said, can you take deductions from a W-2? No. So if you get a W-2 from another business, like you work for someone, you cannot. Just 1099s, or if you're an S Corp, you get a W-2 in your business, so then you can, but other than that, no. Someone asked, why don't you want to hold property in an S Corp? Because real estate is a passive activity, and you want to keep your passive in the passive bucket. And when you're an S Corp, you have to pay payroll on yourself, and you don't want to have to pay payroll on an activity that's already passive because you don't have to pay the 15% self-employment tax on rental real estate property. Does that make sense? Someone asked, what if it's a vacation rental? I still wouldn't have it be an S Corp. I would have it be in an LLC. Because if it's like Airbnb, that also isn't subject to self-employment tax either. All right, education, we went over that. Vehicle expenses. Also a huge, this is probably like the #1 expense for real estate agents. And I would say probably most of you take mileage when really you should write off the cost of your vehicle, because your vehicles are expensive, especially right now. Holy smokes, have any of you tried to buy a car? And when you write off the cost of your vehicle, you can also write off all your gas, which that adds up through the year. You can write off your repairs, maintenance, detailing, getting it washed. You want to get it lifted, who knows? You want to get some like bumping subwoofers in there, like anything related to your vehicle. So there's 2 ways. Yes, rims, the spinny rims, only spinny rims. I don't know if that's the technical term for them, but so there's two ways to write off your vehicle, right? Mileage. That's probably what you guys are mostly used to. You add up your miles for the year. You can take like 56 cents for last year. You can, if you can say you use your car 50% or more for business, which I don't know what a real estate agent that doesn't use their car 50% or more for business. But say you're like, yes, I use it 60% for business. You can add up the cost of your car, however much it was when you bought it. If you financed it, that includes the interest. And then, like I said, gas, repairs, spinny rims, all of that. So usually writing off your vehicle, the cost is better than just mileage. And there's no like limit to that, really. I mean, you could write off a Lambo if you wanted. I wouldn't write off 5 Lambos, but there's nothing that says you can't buy a luxury car.
Quick question.
Mhm.
Can you do that every year though? Or like, how does that work?
So say you have a $50,000 4Runner. You would write off, well, you have a choice actually, which this is getting very granular, but you could either write off $50,000 of the car this year, or you can divide it over 5 years if you wanted. So like 12,000, or what is that? 10,000 a year for 5 years, plus all the gas, maintenance, blah, blah, blah. So if you went the 50,000 this year route, right, you get a huge deduction this year, but you always want to make sure that that makes sense. Do you have the income to offset it? If you don't, then just take the 10,000 a year. But then next year, you already took the 50,000, so you can't take it again, but you can still take gas, repairs, insurance, registration, licenses. Like, it's still probably more than just taking mileage. And you got to take $50,000. So no, you can't take the same expense. Like, you can't take the 50,000 every year. You could buy a new car every year and take that. Hopefully that answers. And then someone asked, does the weight of the car matter? Yes and no. So if the car is 6,000 pounds or more, like a 4Runner, you can take that 50,000 in 1 year, the whole cost of the car. If it's under 6,000, so say like a Toyota Corolla, you have to take it over 5 years. So say you purchased a Corolla for like 30,000, you would divide that by 5 and you get to take that. So 6,000 a year, you get to take 6,000 a year for 5 years. So if it's a heavier car, you have the choice of taking it all in year 1 or over 5 years. Someone asked, if we have 2 vehicles and we drive both 50%, can you write off both? Yes. So always try to drive your spouse's car too, or add them into your business. So if you have an S Corp, for example, you can have them either on your board of directors, or you can have them be a 2% owner, or you can have them be an employee, and then you can write off multiple cars. Someone asked, if I've never taken the full price option, only the gas option, can I do that now? So that's another rule. You can't switch from mileage to actual, but oh, no, I take that back. You can switch from mileage to actual, but you can't switch from actual to mileage. Make sense? So in Smith fam, sorry, your first name's not on there. Question, you can switch to the full price option, but you can't, if you already took the like 50,000, for example, you can't then go to mileage. Oh, hi, Megan. Okay. Are we good on vehicle deductions? Long story short, write off all the things for your car, buy a nice car, write it off in your business, save all the money in taxes. I'll just touch briefly on wages. So if you are a sole prop, so you don't have an LLC, or you are an LLC owner, you cannot take payroll from your business. But if you are an S Corp owner or a C Corp owner, you have to take wages from your business, and the wages are a business deduction. I just like to touch on that in case any of you are S Corps that don't pay yourself payroll. It's a $22,000 fine if the IRS pulls your return. So don't do that. I just saw one yesterday from a prospect client. And I said, you have about $80,000 in penalties the last 4 years if the IRS looks at your tax return. So we need to amend them. And then I just like to touch on retirement. So usually I would say entrepreneurs, we think about ourselves last in terms of retirement. So There are really, really awesome retirement accounts that are literally there just for business owners to reward us for being business owners. So use them. There's something called a solo 401k, and you can put up to $61,000 per year away for yourself for retirement, and it's a business deduction. 61,000, right? That's way better than a corporate job. Of course, there's rules about it and blah, 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 but totally worth it. A solo 401k, if you don't already have one, you can make them self-directed if that's your jam. There's even there's something called a cash balance plan. If you have a lot of cash flow, if you're like, the 61,000 is awesome, I already contributed that, but I want to do like hundreds of thousands. There's something called cash balance plans. There's something called captive insurance, and you literally can put millions away, and it's a business deduction. Someone asked, do we work with self-directed IRA accounts? Yeah. I think everybody should have a self-directed Roth for sure, but I'm not a financial advisor, so I can't give you financial advice. That's just my personal opinion. Sorry, let me admit this person really fast. Okay, I switched the page, but it looks the same in case you're like wondering. Donations. So donations, oh, was someone asking a question? No, okay. Donations are actually not a business expense, which companies donating to things, but they're not a business expense unless you're a C Corp, then it is. So that's why you hear about big corporations doing it, because they get the deduction. But as an LLC or S Corp, it's not a business deduction. It flows through to your personal tax return, and maybe you get a deduction for it. So I just like to mention that. Business travel is another favorite topic for people. How can I write off my vacation in my business? And I would say first and foremost, never call it a vacation. It's always a work trip, right? But the IRS rule says for domestic travel, so within the US, it has to be 50% of the days be business related. So say you went to Florida for 7 days. 4 of the 7 days have to be business related in order to write off your airfare, lodging, meals, all that. So the day there and the day back, the IRS already says that can be counted as business. So now you really only have 2 days in there that you need to figure out, how can I relate this to business? So maybe one day you check out listings and another day you have a branded photo shoot. There's your 4 of 7 days, and that 7-day trip can be a business expense. For international travel, I think this is another cool IRS rule, which there's not many of them, but you only need 25% of the days to be business related for international travel. So that's kind of cool. Which means if you went to Mexico for a week, 7 days, you only need 2 of the 7 days, and the day there and the day back is already business related, so you're already there. Photography. So if any of you guys get like branded photo shoots, you can write off, obviously, your photographer. You can write off if you got your makeup done, if you got a blowout, if you got a spray tan, your nails done, lashes done, whatever, you know, to like look the part for your photo shoot. You can also write off props for that photo shoot. So I don't know, say you needed to buy like some cute cups to hold because you don't know what to do with your hands if you're like me. So any props that you might have can be a photography expense. I will say that clothing, the IRS hates clothing as a business deduction, except for 2 scenarios. One, it has your logo on it, which if you're like me, I'm like, I'm not logoing my clothes. So the other option would be if you can say that it is for modeling only. So you literally have to write on the receipt for modeling only. You have to have like a separate chunk in your closet that says for photo shoots only, and never wear it again. How the IRS will know if you ever wear it again, I don't know, but that's just the rule. Advertising. So this would be obvious like Facebook ads, Instagram ads, things like that. But again, back to like gifting clients, try to make it an advertising expense instead. Maybe you do a giveaway on social media. So like share this post and you can win a Starbucks gift card. That's advertising expense because you're asking them to share your page in some way. Again, anything with your logo on it, any swag, all that kind of stuff. Security expenses. You can actually write off guns and ammo if that's your jam as a home office expense if you have a home office, which I think is kind of cool. A lot of the guys like that expense. Health insurance is probably the #1 missed deductions on business returns. So don't forget to tell your accountant how much you paid in health insurance for the year, because you can write it off. What you cannot write off though are like Christian health share plans, Medishare plans, because the IRS doesn't recognize them as insurance. And you can't write off, like, say your spouse works for like a corporate company and they offer you insurance, but maybe it's like $100 a month for you to be on the plan. That's not a deduction. But if you have your own plan, then it can be. And you can have the plan for your spouse and kids, and that counts too.
I had a question. Oh yeah, back to the guns and ammo. So if we did pay for that out of our personal account, it's still okay to go back and write that off.
Yeah, I would, you have an S Corp?
Yes.
I would make sure you have an accountable plan, and
Okay.
your accountable plan the business will reimburse you personally for.
Okay. Okay, and then my other question is, is obviously like if you buy a lot of ammo, I feel like you can't write a lot off, right? Or I don't know.
There's nothing that says like you can only have 100 rounds.
Okay.
But I would say like don't be too excessive, right?
Okay.
But
good
whatever
to know.
you think is, yeah. Kristen started her militia. Okay, so those are just some deductions that are easily missed in your business. So as you're getting your stuff together for your tax returns, try to go back for your last 12 months of statements and just see kind of what you missed, what you can add in there for deductions. Tax strategy is really our like bread and butter service. This is where we like dig into your business, find ways for you to save. And just some of the ways that we save people money, like I mentioned, entity type. So do you have your LLC? Should you switch to an S Corp? Maybe you need multiple layers of entities to help save in taxes so that one company can loan another company money, or a whole bunch of reasons. It could be for different real estate properties, a whole bunch of stuff. So looking at entity type is kind of our first thing. Then we look at who can we shift money to that it's tax-free. So like everyone should have their kids on payroll because it's tax-free to them and it's a business deduction for you. Do you have parents or elderly grandparents that don't have other income either? Can we shift income to them? Maybe you have a brother or a cousin or whoever. So family income, because there's a lot of people probably in your life that we can shift tax-free money to. Another cool one is the Augusta Rule, and that's where your business can rent to you personally, and it creates a really big rent expense in your business, and it's tax-free to you personally. So that's a cool rule. And then I mentioned it briefly before, but adding your spouse to your business or board of directors. So then anytime you guys go on a date night or weekend getaway, we can call it a board meeting. Ooh, my voice is already going out. And like I mentioned, just some ways to work with us. Obviously, we prepare tax returns. So if you go back, you get all your deductions and you're still like, oh my gosh, I still don't want the burden of like doing my taxes, we can help with that. If you're like, man, I literally had a real estate agent message us yesterday and she was like, I just paid $79,000 in taxes, help. And so obviously she needs tax strategy. That's where we find tens of thousands of dollars in tax savings for you. Or if you just want like a consult, we can do that too. But here's our website, yourtaxcoach.biz. And then that's my personal email as well. If you just have any questions, or feel free to DM us on Instagram if you have any questions. And Kristen asked if we can help people outside of Arizona. Yeah, our licenses are all 50 states. So we're not like attorneys that are limited to one state. But does anyone else have questions? Feel free to just like unmute yourself if you do, or put it in the chat.
Hey, Barbara, this is Dan.
Hi, Dan.
My wife, hi, nice, awesome presentation, actually. That's really exciting. We just moved to South Carolina, and I've got an accountant right now that's in Arizona still, and we were getting ready to file. And they're good, but I don't think we're anywhere close to tapping what you just taught me in the last hour. So at this point, do you recommend just finishing up and filing this year? I have stuff in QuickBooks and all that, or I want to call you for a consult, but do you recommend maybe pausing and then giving you guys a call? Because I just don't think we're really tapping into like we should be.
Yeah, good question. We see it all the time where like even their other accountant had their taxes done and we're like, no, don't file that tax return. So yeah, I would say it's best if you can switch over to us before they file. But if you do have returns that are already filed, we can amend them. But I would just say it's better, to file them originally. And to that point, we can go back up to 3 years and amend people's tax returns. So we do that all the time and get people back hundreds of thousands of dollars. So if you do come on as a client, we always look at 2018, 19, 20 as well to see if we can go back and amend some.
Okay, and then the best way to reach out to you is just shoot you an email at that you just showed us and just go from there.
Yeah, that'd be perfect.
Awesome. Thank you very much. Appreciate that.
You're welcome. Kristen, I saw your question, but I don't know how to do that.
You just hit the 3 dots next to my name.
I'm like not technologically savvy.
You see it?
Yeah. Okay. Now you're the host.
Okay, cool.
I think someone asked in the chat, if you've already set up an S Corp, can you change it back? Yeah, you can. It's called you can revoke your S election. So it's literally just a checkbox on your tax return. But maybe just chat with me after to let me know what's in your S Corp and kind of what income is in there. And then someone asked hair, nails, lashes. So those can all be photography expenses. If you do like branded photo shoots and stuff. Any other questions?
Oh, I do have a statement for all you girls out there that are coming to Flourish. Barbara's going to be speaking on money mindset. Hold on. So you definitely want to come.
Yeah.
I have a question.
Yeah.
If you do not have an LLC, I haven't gotten one yet and I need to do that. But so when I file for this year, is it like it's like the year that you get it, right?
Yeah.
Okay.
But having your LLC won't change your taxes at all. Like dollar for dollar, you'll pay the same in taxes. But what the LLC will do, besides legal protection and anonymity and all that, is then we can switch you to an S Corp, but we can only switch you to an S Corp as far back as you've had your LLC. So we could only make you an S Corp for like 22, if that's when you got it. Unless you have like a rogue LLC out there somewhere that maybe it's not used or something, but yeah, but we could still find other tax strategies like for last year.
I also have a question about so I'm going to be doing some like home renovation type stuff in combination with real estate. So when I do like a project or something, how much of that is, because like when I do something on my home, it's like deductible like 10%. But if I'm like documenting it and putting it on my Instagram, does that change how much is deductible?
Do you make money off of showing that, or?
Well, I'm just going to incorporate it with the business, like just helping people love where they live. Like, so it'll be more some home improvement stuff and some real estate stuff.
I would say no, unless you have affiliate links for like everything that you're doing a demo on.
Okay.
There has to be a way that you're making money from that deduction in order to take it.
Okay, thanks.
Otherwise, yeah, you just do that like 10% or whatever is your percent for home office. Someone asked, how do you change from LLC to S Corp? Have an accountant do it. It's an application you have to run through to the IRS.
Hi, Barbara. This is Megan.
Hi.
Piggybacking off of what Jerry said with the remodeling. So we just purchased our second home in December, and we're turning our first home into a rental. And we did a bunch of remodeling and things of that nature. So would all of that be deductible because we're turning our other property into a rental? Or where would that fall under, like all of the renovations we did?
So if the renovations are done prior to you making money as a rental, you can't expense it, but it will all add up into your basis is what it's called, and you can depreciate that. I will say, if you have any rental properties that you have not done a cost segregation on, cost segs can save you tens of thousands of dollars in taxes. And if you don't know what those are, please research them, because you should also recommend these to your clients if they're buying investment properties. But basically, if you don't cost seg something, say you buy a house for $300,000, you have to depreciate that over 27 and a half years. So, you know, maybe you get 10,000 a year as a depreciation expense. But if you cost seg that, maybe it will say you actually get $30,000 a year, or 50 or 100. It depends what the cost seg comes back at. So you literally can accelerate your depreciation, take it faster. And cost segs are actually required, which like nobody knows that. If you were to be audited on a rental property and you didn't cost seg it, the IRS would say, oh, you didn't take this accelerated depreciation, you no longer get to take it ever. So sorry, I kind of went off on a tangent about your rental question, but you'll be able to take it in depreciation, but make sure you get a cost seg study done.
Okay. All right, thank you.
Someone
I remember you talking about this last time, and don't you do something in-house? Like if I needed to do a cost segregation, it would cost me a crap load of money because I'd have to hire an architect to come out to my house, blah, 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 blah. And you went and purchased the software to be able to do it for your clients. Is that correct?
Yes, but we can only do it in-house if the property is, I think, under 600,000. Above that, you do have to get an architect to do it.
So,
but our software can do it under
under 600 value, or how much you owe on it?
How much you purchased it for.
Oh, perfect. Okay.
Yeah. Thanks for bringing that up. Someone asked, is there a website to get your LLC? Yeah, whatever state you're in, you just put in like South Carolina LLC and make sure it's a .gov website. Don't get spammed by all the other websites, or have an attorney do it. But honestly, you can get your LLC by yourself. If you travel internationally and do work from your computer, does that count? No, because the IRS would say you didn't have to go to Mexico to, you know, write an offer. Are all subscriptions, office expense, food has to be spent with your business card? Yeah, again, you want everything business related to come out on your business card, because you don't want to what's called commingle expenses. The IRS doesn't like it. If you're audited, they will disallow like legitimate expenses for you. So as much as you can, keep it separate. Get a bookkeeper if you need to. Yeah. What else?
That was really good.
Thanks. We love this stuff. So reach out if you have questions. DM us if questions pop up. If you're filing your return and you're like, crap, I owe too much taxes, just reach out and we can help you. But I look forward to seeing you on Instagram.
Yeah, so guys, make sure to follow her. She put her account in here earlier, but in case you hopped on late, it's Your Tax Coach on Instagram.
Awesome. Thanks. Have a good one.
Okay.
Bye.
Bye. Thank you.